This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain, and cryptocurrency space. My guest today is Greg Dincelli. Greg is a crypto fund of funds manager. He is the co-founder and managing partner at Scenius Capital, and he's also an advisor to turnkey Capital. Welcome to the show, Greg.
Andy, it's great to be here. Excited for our conversation, and thank you.
Hey, it is a pleasure to have you here, Greg. So we'll do what we do at the beginning of the show. Love to hear just a little bit about your professional story and background and, what you've been doing in the lead up to co-founding Scenius Capital.
Of course, happy to provide some background. I think it's probably a little bit unusual for some of your guests. So I'm based in Miami in the USA. And I was a lawyer, practicing lawyer here for 13 years since graduating from law school in 2008. Was a litigator and began investing in crypto in 2016 when my brother, who's my co-founder, Ben, was introduced to Bitcoin by his GMAT tutor, who offered for him to pay him in Bitcoin or in dollars. And Ben had no idea what Bitcoin was. And we then decided to all learn about it together and sort of went down the rabbit hole. And that led to a number of investments, mainly passively over the years, starting with Bitcoin, Ethereum, Chainlink, and then some others over time. But during that time, obviously, there wasn't sort of the product market fit that we've seen develop since then. There was the promise of decentralized systems and potential sovereign store of value and legal tender possibilities, but we hadn't seen those things materialize. And instead, we experienced sort of an ICO boom and a lot of exuberance, a run up in price, and then a crash and a crypto winter. And then it wasn't until 2020 where we saw the emergence of smart contract enabled blockchains and the emergence of decentralized finance, DeFi, mainly on Ethereum. And when that happened, my brother, my other co-founder, David, and I really believed we were seeing, signs of product market fit and thought that there was an opportunity there because there was a lot of exuberance and people wanting to invest capital and use these non-custodial, self-sovereign tools to transact on a blockchain. But there wasn't really a great deal of transparency in terms of where was information, where were the markets being made, where's liquidity, who has best in class access to that kind of information in these nascent markets is generally professional investors. And so our thesis even at that time was that professional investors would have a lot of edge in crypto markets. And we decided that we wanted to, since we're not professional investors, we decided we wanted to find out whether there was talented investment managers in the space that we could invest with. So this led us to research and diligence several hundred hedge fund managers in the space over time, beginning in the end of 2020. And we were really impressed with the quality of the hedge fund managers primarily in the space. We also spoke to some venture capital fund managers and their service providers and came away noting that these asset managers were trained in traditional finance and Wall Street and legacy financial institutions, and then also had crypto native experts on their teams, guys and women who were qualified with smart contract coding, Solidity, engineering, developer backgrounds, and these hybrid sort of animals of traditionally trained investors along with crypto native experts, made for the perfect, we thought very well suited for the opportunity of crypto investing. And so we decided to form Scenius because we wanted to invest our own capital into a diverse portfolio of best-in-class hedge fund managers. And that's what a fund of funds really is. So Scenius is a hedge fund. We accept investment from outside investors. We pool that capital and invest it into hedge funds. So we have a portfolio of hedge funds. At Scenius, we're currently invested into 10 strategically diverse and complementary hedge funds within one portfolio. And we're also launching a fund of venture capital funds early in 2023. So those are the two products that we currently have offered. But I'll pause there, Andy.
Got it. A fund of funds. I like it, Greg. And look, I imagine most of your investors are actually restricted to the US, but just in case I'm wrong, just tell me who Scenius Capital is aimed at. Who's your target investor profile?
Thanks for that question. Yeah, we are based in the US as a Delaware limited partnership, but we invest globally and we also accept investors globally. So that's US investors through our Delaware limited partnership. And then we have a British Virgin Islands feeder fund that accepts non-US investors as well as tax-exempt US investors. So we actually have a global investor base from throughout the world. And then we invest into funds that are diverse globally. So we have funds based in Hong Kong, funds based in the US. We've had funds based in Brazil, Rome, throughout the world. We invest based on the quality of the team. We search out diversity of investment strategy, diversity in leadership, and we source for best in class. And so we've created a repeatable, robust diligence process from sourcing to investment that we believe allows us to screen out and screen for best in class managers, with the thesis being that if you create a diverse portfolio of best in class managers, you will outperform the sector over the long term. And I'll pause there, Andy.
Sure. And, it's funny talking to you today, Gregory. It is Tuesday, the 13th of December. For me, probably the day before for you. By the time this is published, we'll be really knocking on the door of Christmas all around the world. And, most, I think, crypto people, Greg, will be very pleased to turn the leaf on 2022, because it has been a volatile, turbulent year, to say the least. We've seen the downfall of a number of bad actors and the uncovering of some fairly unsavory fraud, just irresponsible leverage, all sorts of shenanigans underneath the hood of the global crypto markets. So I suppose, look, I just invite you really to reflect on what the year has been, Greg, and does this have any effect on your kind of long-term crypto thesis, I suppose?
Yeah, and I echo the way you said it very articulately about, it's been a painful year. And I think we've been reminded on several occasions now with the unraveling of Terra Luna, Celsius, 3AC, and most recently with FTX, that, we need investor protections and some regulatory clarity in this space in order for the space to grow meaningfully. And, opaque, non-transparent financial institutions are subject in crypto to the same problems that they are in traditional finance: greed, and ultimately the potential for fraud and taking excess risk. I think that has been all too apparent recently, and I wrote about this on our senior Substack. I got the idea from a JP Morgan internal note on FTX potentially being the catalyst that the sector needs. So yes, this may be a very meaningful and big step backwards, but can it be the catalyst we need to take 2 big steps forward? I think it can be potentially, but in order for that to be the case, we need investor protections and we need regulation around particularly centralized actors in the space. So be it centralized exchanges and ensuring that they, and also stable coins, be it that they provide things like auditing, transparency, clear risk parameters, proof of reserves. We've seen some centralized exchanges come forward with Merkle Tree proof of reserves. which is all on chain, which I think is a step in the right direction. I think those sorts of things are important in order to recreate trust. I think what's been damaged a lot in the zeitgeist and globally is trust in the ecosystem. In order to onboard the next mass level of investment and major institutional capital globally at scale, there has to be trust. Investors need to know that they're investing into products that have the necessary regulatory frameworks in order to do so confidently. And so I do hope and expect that that will happen in the near future. Sadly, we know that Sam Bankman-Fried was, sort of a mouthpiece for crypto on Capitol Hill here in the U.S., and he'll be testifying in front of the House tomorrow, which is Tuesday, December 13th for me. And so I think it'll be very telling. I don't expect we'll get a ton of answers, but I think what we'll see is that that next level of investment will take needed regulatory clarity, and I'm hopeful that we get that. And just one other point, Andy, and I think this is important, is we should distinguish between centralized opaque actors and DeFi and this ethos of self-sovereignty, non-custodial transacting, which is sort of what Bitcoin and DeFi is meant to progress forward. And so I do think there's a distinction to be made there. But I think in order for this industry to scale, there's going to have to be a move towards greater regulation. And I think that hopefully can come across the hundreds of jurisdictions globally in order to get the kind of adoption that we all hope we get, so that we can continue to steward this technology forward for generations to come.
Yeah, absolutely, Greg. And if we zoom out and I suppose look at it on that longer term generational timeline or time frame, if you like, then where are we? We're still very early, even though 2022 has been the dreaded crypto bear market and been made worse by the blow up of the likes of Three Arrows Capital and the nefarious actions by Sam at FTX. There's always a narrative, Greg, that the bear markets are necessary because you need the bear markets to to show who is swimming naked, or which of these emperors has no clothes, to use a cliche, and it's necessary just to flush all this excess and baggage out of the system. So we've certainly had that. Once the wreckage clears, perhaps we'll get some new regulations in place. There's always a challenge for that kind of balance between innovation and protection, of course. But do you see opportunities for new capital to come in and be meaningfully deployed at the moment?
Well, I think that some of the time, the timelines have potentially been pushed back a little bit in terms of meaningful institutional capital coming in as planned, perhaps when prior to FTX or prior to some of these events. But I think there's valuations coming down creates opportunities. I saw an article about Goldman Sachs. We routinely see news of major traditional institutions using blockchain. You can transact using cryptocurrencies now. So I think there's this built-in understanding now that blockchain and digital currency is the next iteration of how transacting will happen, and that crypto is not going anywhere. The sector is here to stay, even though we've experienced these unfortunate events. So I think that the institutions are still readying themselves and finding what their high conviction plays are to make those investments. It wouldn't surprise me if some of those investments have a longer timeline now, or the diligence period takes a little bit longer, simply because I think we saw some extremely well-known investors investing into the equity of FTX who, it's been brought to light, maybe didn't do the due diligence that they have prided themselves on doing historically. So I think, there's going to be a reversion to first principles of doing, proper due diligence and counterparty risk evaluation and all those things around investment. But I do think valuations on liquid tokens here are attractive. Certainly, I think, we've seen, people wanting to buy Bitcoin at $65,000, and your phone is ringing uncontrollably. With Bitcoin at $17,000, no one wants to touch it. But I think the reality is always somewhere in the middle, which is, at 17,000, the thesis that you had at 65,000 or 60,000 isn't, unless it's materially changed, then at these values, you're getting a bargain. I'll add that, that's on the liquid token side. I do think there's interesting investment opportunities in the private markets, which is why Scenius is launching the fund of venture capital funds, which is focused on early stage investing. Again, same model, investing into venture capital fund managers. So we're targeting $25 million in that fund, with the idea of investing into best-in-class venture capital managers, because we recognize that the liquid token side of the equation in crypto may be a little bit difficult for certain investors to manage right now. But if you believe that blockchain is, bleeding edge innovation that has great potential to drive value over the long term, then investing in the companies that are driving that at the earliest stages, so seed, pre-seed, Series A, I think is a very interesting opportunity. And so being responsive to sentiment and overall market, that's why we've thought that product could have strong fit with investors that might not want to be invested in tokens for the time being, but are still interested in participating in the sector and investing into the innovation that's being driven behind it.
Yeah, absolutely, Greg. And just to bring it back to market sentiment, you're talking about how back when Bitcoin was above 60K US and your phone is running off the hook as people scramble to try and get involved. Of course, now that Bitcoin is down around $17,000, well, those people are nowhere to be seen, and it just speaks to the market psychology that is the euphoria of a bull market, and of course the depression of a bear market. But as you said, Greg, if the long-term thesis for Bitcoin and let's say Ethereum as well, if nothing really has changed fundamentally, then now perhaps is a good time to nibble away. I like to use just a very basic, slow and steady, cheap and cheerful dollar cost average approach. That's about as exotic as my crypto trading ever gets. But I wonder if I was just looking at Scenius Capital, they're based here in New Zealand. Well, people all around the world, but yeah, set up here in New Zealand, and you're an advisor to them. They have what they call the holistic ETH BTC portfolio, Greg, and also some more exotic DeFi portfolios. What are those products aimed at?
Yeah, so I got connected to Scenius Capital actually through their executive director and one of the founders, because I was very involved with a particular DeFi company in terms of investing early and using the protocol early. And we started discussing, and that project was being supported by Scenius Capital, and Fran Strasner, who I had discussions with, and I became very friendly. And he started telling me about Scenius different investment products. So there was the managed DeFi product, and then the holistic BTC ETH product. Basically, these products are formulated on the thesis that actively managed solutions in the space will outperform simply holding. And so these are enzyme-based products. They're actively traded with professional managers, and I'm an advisor to those products. And our function is essentially to assist with actions that might require the approval of the investment committee. So it can be allocating to a new asset, or transactions involving greater than a certain percentage of the portfolio, or holding losses longer than generally expected, or profits longer than generally expected. So riding your winners and things of that nature. So Tekami's been is a really excellent team, also like you, based in New Zealand, and I've really enjoyed my role there, and it sort of is consistent with what we're building at Scenius, which is the idea of actively managed diverse solutions in the crypto space will outperform, because the 24/7, 365 nature of these markets is just simply too much for the average investor to manage single-handedly, or even for small family offices and some endowments and some pensions that don't want to allocate the resources to it, which is why you outsource it to a fund of funds like Scenius, and you select best-in-class asset managers. It makes a lot of sense because you avoid single manager risk to the extent that any manager utilizes diversity to reduce concentration risk. The same proves true in a diverse portfolio of multiple managers, which is what we try to do, which is multiple managers utilizing strategies that are themselves diverse from each other. At Scenius, our portfolio of hedge funds is 70 to 80% long directional fundamental funds. So funds that invest in tokens that are undervalued, expecting the value to go up. And then 20 to 30% market neutral or lower beta, so less correlated funds to the overall market. Those are often arbitrage funds, so spotting inefficiencies in pricing across exchanges or funding rates and arbitraging those out. And then it can also be things like DeFi market making or DeFi yield farming, where directional risks from a particular token can be hedged out. And so we blend these strategies together within a single turnkey portfolio solution. And by using the 20 to 30% market neutral exposure, we think it allows us to hedge out our downside. So we're okay lagging a little bit to the upside if we can protect capital more and compound from a higher basis, as over time, we think that creates a better return profile for our investors.
And certainly there will be a number of players across the crypto trading ecosystem who wished perhaps they'd hedged themselves just a little bit better during the froth of the last bull market. But hey, it's a story as old as time. And that's why we call them bear and bull markets. And just for listeners, if you're enjoying what Greg is putting out and you want to learn more about Scenius Capital, the website is just simply scenius.capital, and Scenius is spelled SCENIUS. And the website for Tekami Capital is tekami.capital. Links to both and will, of course, be in the show notes. Just before we go to a break, Greg, and I very much look forward to running you through the very famous crypto conversation hot take round. But you and I were chatting on Telegram earlier, and listeners, I'll confess, this is actually the second time Greg and I have recorded today's podcast. So we did it about an hour ago, but somehow, listeners, I managed to record my side of the conversation, but I wasn't recording in Zoom, and so did not get the podcast recorded. And I think I've done something in the order of 260 episodes of the crypto conversation, and that's the first time it's happened, Greg. But a little bit embarrassing. That's
okay. I've enjoyed that conversation and this one even more so. So glad to have gotten the dry take, and the second take I think has been great as well. So no worries at all from my end.
Indeed. And well, the reason I mentioned that we were chatting in Telegram is I was just looking at your Telegram avatar. It's a pudgy penguin. I think you're an NFT guy.
Yeah, it's the little pudgy. Right. So if you had a pudgy penguin, you were granted rights to mint a smaller pudge version of a penguin, and that's my avatar on Telegram, is that small little pudgy penguin. But yeah, I am a NFT aficionado, and I have enjoyed collecting the JPEGs and think that it's fun. I subscribe to the philosophy with NFTs that only invest in things that you genuinely like, because there's no, it's hard to have an edge in assessing where value will accrue across that ecosystem, when I think there's a handful of very well-informed and expert, investors in the space that, can sort of figure out where the market's going and know the best projects to invest in. So I don't claim to have that type of edge. But I've really enjoyed some of the profile picture, different NFTs, and of course the algorithmically generated art I think is really great, like the Chroma Squiggles, or other things that Swiggle DAO has put out, I think is great. But what fascinates me the most about NFTs is, I think, the thesis of creator empowerment, right? Which is that you have this very powerful distribution channel, which any creator can utilize if they can mint NFTs onto a blockchain. It doesn't matter whether they're in Ukraine, in Egypt, or in New York City. If they have the ability to get onto that same blockchain, then they have access to the same distribution channels as the most well-connected artist would. I think that's quite empowering, along with the resale royalties that can be built into the smart contracts and into the different platforms. I think that's something that's great. My family used to work as art dealers in the industry, and I think many creators historically would have loved that opportunity to participate in royalties on subsequent sales of their artwork. So I think that's one of the major unlocks that NFTs can power in terms of the creator economy going forward, and the way that artists can look to the economics of the pieces that they create.
Very nicely said, Greg. Thank you for sharing your thoughts. Let's go to that break, and we'll be right back with the very famous Crypto Conversation Hot Take Round.
For crypto indices and benchmarking, Brave New Coin's powerful indexing engine can calculate high-frequency intraday and end-of-day indices for a wide range of index products. Brave New Coin's custom indices team delivers experienced consultancy, premium data, and trusted calculation. Contact BNC today to find out more.
And boom, we are back, and I'm with Greg Dinicelli. Greg is co-founder, managing partner at Scenius Capital, and an advisor to Tekami Capital. Greg, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Let's do it. I'm ready.
All right. Here we go. Question one for you, Greg. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I think it's a multi-chain world going forward. Bitcoin does not have the same capabilities, I think, to scale as other blockchain layer one blockchains do. So Ethereum vying to become the global internet settlement layer as a baseline layer one, I think, versus potentially being a store of value like Bitcoin may endeavor to be in a legal sovereign currency. I think it's also important to remember that different layer ones can have different use cases. So, subnets on Avalanche that can have, KYC, AML requirements built into the code, I think is quite interesting. So if you can have, sufficiently secure blockchains, some of them can serve different purposes. I think that's why interoperability has been such a long theme that we see, the ability to link these chains together. So I certainly believe, multi-chain world on a blockchain level.
Very nice. Okay, then, Greg, what would you say is your firmest conviction, a crypto opinion?
Firmest conviction is that, we have to bear in mind that this is bleeding edge technology, and much of that kind of technology has a high failure rate. So we can't hold blockchains accountable for all the failures that we see on a day-to-day basis because they aren't scaled, they aren't reaching their full potential yet. So I think you have to allow the technology to continue to mature before we, indict an industry from, several failings that might be, from centralized actors and not decentralized actors, which is what, crypto has been aiming to solve all along.
Absolutely. And, that one of the reasons for that, of course, is because we are still early. So if we are early, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So, Bitcoin aside, let's say, blockchains have been around for roughly 10 years, roughly 1 decade. Cast your mind forward another decade, and what does the blockchain space start to look like, Greg?
Yeah, I think the biggest thing is what it doesn't look like, which is we build out a much better UI UX, and blockchains are powering sort of the back end of the vast majority of financial applications. I think that's what we can expect, and so you'll be using blockchain without needing to know it, and the tooling will be seamlessly integrated, and blockchains will be working for the applications that they're well suited for.
Very nice. Okay, the flip side of that is a quote by sci-fi author William Gibson, who famously said that the future is already here, it's just not evenly distributed. Can you think of an example, Greg, of the future being here right now, but most people aren't aware of it?
Yeah, I think things like Roblox, so video games with in-game economies, and you can utilize real world currencies to buy in-game assets. I think there's many parents out there that have children that are playing these video games, whether it's Fortnite or games on Roblox, and that are using their allowance to buy assets that they treasure inside those ecosystems. So I think that speaks to the metaverse having permeated parts of our existence without us really having known it. And so the next iteration of that may be NFT-enabled transferable assets on a blockchain. But people don't recognize yet that many of our children are living in pretty sophisticated in-game economies without even being fully aware of it. That metaverse may be here sooner than we know it.
Could not agree more, Greg. Very nicely said again. All right, well, time to get weird for a second. Time to zoom out. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
I am on the utopian end of that spectrum. I think the human condition tends to ameliorate over time. And I think we'll, for the vast majority of people on the globe, as time passes, the situation improves for them. I feel strongly that we'll be living in the best age for humanity that there ever has been. And I think that will continue to be the case for future generations.
I love it. All right, finally, let's start to finish this off. Greg, what is your favorite science fiction book, film, or TV show?
Yeah, good question. I'm more of a fantasy person, so I'll opt into Game of Thrones and Lord of the Rings, if that's okay.
That is more than okay. Myself and my family, we are rewatching Game of Thrones at the moment. Because we've got a 12-year-old boy, so it's first time round for him. But the rest of us are rewatching it. Yeah, really enjoying it. It's actually it's a better watch if you can binge it a little bit rather than having to string it out 1 episode per week over 8 years. That was a bit punishing, but being able to binge it, Game of Thrones, recommend.
Yeah, punishing in terms of the anticipation for each new episode was unbearable the last time around. I couldn't agree with you more. Have you watched the prequel when they came out?
Yeah, we did watch that. I didn't enjoy it so much.
Not quite as good, right?
Yeah. Maybe I'm sure as they kind of build up ahead of steam, it will just get better and better as it went, which is what happened with Thrones really as well.
Yeah, completely. I enjoyed it later in the season for House of the Dragon, but that doesn't compare to the original.
Agree. Hey, Greg, this has been fun. Thank you so much for coming on the show. Nothing else to say really, except, well, could you please tell people where you like to hang out online, and of course, again, where they should go to learn more about Scenius Capital?
Thanks, Andy. The website that you gave earlier is a great way to reach out, www.scenius.capital. You can contact us directly through the website. Otherwise, you can always find me on LinkedIn under my name, Gregory Dincelli. Please, I like to speak my views on LinkedIn there, and I'm always available. So please don't hesitate to reach out directly there. and always open to a conversation. And Andy, very thankful for the opportunity to have this conversation with you. Recording it twice was fine with me, and hopefully we can record a third one in the future sometime. Thank you.
Yeah, you'll be always welcome back for a third go around, Gregory. Thank you very much. All the best, and bye for now.
Bye. Thank you.